It is related to article number 19, which is related to transport document covering at least two different modes of transport. So if a letter of credit, is covering, is basically it is covered by two different transport documents. Let us say two different bill of lading are basically conveyed to us. Two different bill of lading are conveyed to us, and in that particular case, if the different bill of ladings are given but the voyage was same, the mode of transport was same, it would be considered to be as the same transaction. And after related to this article number 19, it says the transport documents covering at least two different modes of transport, so it must be indicating the name of the carrier and it must be signed. So first of all, if it is covering at least two different modes of transportation, in that particular case it must be indicating the name of the carrier, and further it must be signed. It must be indicating that the goods have been dispatched. And further the date of issuance of the transport document will be deemed to be as the date of dispatch. So it is very much important. So what would be considered as to be the date of the dispatch? The date of the issuance of the document, the date of issuance of the transport document will be deemed to be as the date of dispatch. And further it must be indicating the place of dispatch. So the date must be there, the place must be there, and be the sole original transport document, or if issued in more than one original document, then in that particular case it must be containing the terms and conditions of the carriage or make reference to another source containing the terms and conditions of the carriage. Okay, is it clear? So first of all, it is related to that it must be indicating the name of the carrier, it must be signed, it must be having the date of dispatch, and then it is related to the, it must be mentioned there in the place of dispatch, and further it must be the sole original transport document. And if there are terms and conditions, and if the terms and conditions are not mentioned therein, in that particular case the reference to the document where the terms and conditions are mentioned must be there. Is it clear? After that, it is related to article 20, that relates with the bill of lading. So in the case of bill of lading, basically these particular articles, article 19, 20, 21, 22, these are related to what? These are related to the transport documents. So in all the transport documents, it must be in the name of the carrier, and further it must be indicating that when the goods have been shipped or when the goods have been board above the vessel, so it must be mentioned it over there. And further it must be indicating shipment from the port of loading to the port of discharge, that is from what port the goods are loaded and up to what port the goods will be discharged, it must be mentioned over therein. And further be the sole original bill of lading, it must be the sole original bill of lading, or if issued more than one original, be the full set as indicated on the bill of lading. Is it clear? So if it is issued in more than one original copies have been issued, all must be accompanying the negotiating documents. That is very, very much important. But at least one original copy must accompany. But if there is more than one original copy, all the original copies must be accompanying the negotiating documents. Then it is related to article 21, that relates with the non-negotiable Waybill. It must indicate that the goods have been shipped. Okay, so whatsoever mode of transportation is being used, whether it is a chartered party bill of lading, whether it is a bill of lading, whether it is some other transport method, or whether it is a seaway bill, all must be indicating when the goods have been shipped on the board, and there must be mentioned the named vessel on the port it is loaded. It is stated that on what vessel it is loaded, the name of the particular port must be stated over there. And then it is related to article 22, that relates with the charter party bill of lading, that we have already covered. Article 23, it is related to air transport documents, or if the transport has been made using the air transport document, then it must be signed, and further it must be indicating the place of loading and up to which port or up to which point it will be discharging the articles, it must be mentioned therein. And article 24, it relates with the road, rail or inland waterway transport documents, indicate, so the date of shipment must be indicated. As I already told you, that whether it is a railway bill, whether it is a bill of lading, whether it is a seaway bill, whether it is a airway bill, whether it is a chartered party bill of lading, all must be indicating the date of shipment, it must be signed, and further it must be indicating the port from where the documents from where the articles are being loaded and up to what port the load articles would be dispatched. Okay, so all the details must be mentioned therein. Further, it is related to the article 25, that is a courier receipt post receipt or certificate of posting. So courier receipt evidencing receipt of goods for transport must indicate the name of the courier service. So whatsoever courier services are being used, that must be mentioned, and also relatedly indicate a date of pickup, or the receipt or wording to this effect. So there must be some notation related to that must be expressively explained in that particular case, that the articles have been picked up on this particular date. Okay, so that must be there, or there must be some pickup receipt related to it, and further that particular date will deemed to be as the date of the shipment. So these are important. So if we say that there is a transport document, in all the transport documents the common thing is that there must be the date of shipment must be mentioned, the port or the name of the destination where the articles are to be dispatched, that must be mentioned. These are important points related to that. After that, it is related to article 26, that on deck shippers load and count set by shippers to contain and charges additional to freight. A transport documents must not indicate that the goods are or will be loaded on deck. So if it is mentioned, it is not acceptable. If it is mentioned, like a transport document is saying that the goods will be loaded, or will be loaded, that is basically not acceptable. But if it is said over there that the goods may be loaded, that is acceptable. But if it is said that the goods will be loaded, that will be loading that goods in the future, that is not acceptable at all. Then it is related to the article 27. So article 26 is only and only related to which words are acceptable and not. So if the goods have been loaded on deck, that is acceptable. May be loaded on deck, that is acceptable, but will be loaded on the deck is not acceptable. Then article 27, that is related to the clean transport documents. Now I told you related to the clean bill of lading. So it was a particular bill where there is no expressive notation, or clause related, that is declaring the defective condition of the goods, and further related to the defective conditions of the packaging. And I told you also that the bank will be accepting a clean transport document only. So clean transport document means what? It is a document, it is a transport document where it is not expressively mentioned, or it is expressively notated that the particular goods are defective or the packaging is defective, and this is best for the negotiation purposes. Okay, and the bank will accept this type of transport document only. Then it is article 28, very important. It is related to the insurance documents and coverage. So I already told you insurance is a very important document. It must be signed by the insurance company or by the agent of the insurance company, and should not be issued by the broker itself. And also the insurance certificate must be declaring under an open cover, must appear to be issued and signed by the insurance company. I already told you. And further, it must be in the same currency as that of the letter of credit if it is expressively not mentioned in the letter of credit. Like if we say that the letter of credit is opened in USD, in that particular case the insurance policy should also be in USD, and the claim, if any there, must be payable in the applicant's country. So if there is any claim, arises, that must be payable in the applicant's country. Okay, and further, when the insurance document indicates that it has been issued in more than one original, then all the originals must be presented. In that particular case, all the original documents of the insurance must be presented. The date of issuance of the insurance of the document must be not later than that of the date of the shipment. And further, the insurance document must indicate the amount of insurance coverage. If there is not mentioned anywhere in the letter of credit related to the amount of the insurance, it must be at least 110% of the value of the CIF and CIP values of the good. So if the insurance amount is not mentioned in the letter of credit, it will be covering at least 110% of the CIF or CIP value of the goods. Just after the articles, we will be covering the Incoterms, that is, we will be covering the CIF and CIP terms too, where we will be understanding these both. Okay, so just remember, if not mentioned anywhere, then it will be 110% of CIF or CIP value. And further, more than one original means it may be the case that the original policy has been issued in two copies. So both the copies are original. So when the beneficiary is going to negotiate these documents, both the insurance policies must be there. And it must be mentioned therein that the insurance policy has been issued in two copies in original. In that particular case, all the insurance copies in original will be accompanying the negotiating document. Is it clear? After that, it is related to Article 29, that is the extension of expiry date of credit for presentation. I already told you the beneficiary gets how much days? He or she gets 21 days from the date of shipment. 21 days from the date of shipment for the presentation of the document, or up to the date of expiry of the letter of credit, whichever is earlier. So if the expiry date of the credit, let us suppose the last date on which the documents can be presented by the beneficiary, it is calculated as to be 21st of August 2021. Let us suppose we calculated the last date for presentation of the documents by the beneficiary is calculated to be 21st of August 2021, and let us say that particular date is a Sunday, or it is basically closed on that particular date. On that particular date, the negotiating bank is closed. In that particular case, the expiry date will be extended to the first following working day. It will be extended to the first following banking day or first following working day. Is it clear? Then it is the nominated bank must provide the issuing bank or confirming bank with the statement on its covering schedule that the presentation was made within the time limits extended. The presentation was made within the time limits extended, and that is acceptable. A statement will be given by the nominated bank or the negotiating bank to the opening bank or the confirming bank. Okay, and further it is related to Article 30, very, very important article, that is related to the tolerance in credit amount, quantity and unit prices. So if the words like about or approximately are used in connection with the amount of the credit or related to the unit price of the product and no particular amount is mentioned. So if it is mentioned to be that the unit price is 500 rupees per unit approximately, so if it is mentioned to be 500 per unit, rupees 500 per unit approximately, so it will quantify to what? It will quantify to plus minus 10% of the margin. It will quantify to plus minus 10% of the tolerance. So what would be the limit over there? It would be minus 10%, that is 500 minus 10%, that is a 450. So the range could be from 450 to 550. Is it clear? So the product price range could be from 450 to 550. So if the invoice was generated, keeping in mind that particular unit price, because it was mentioned over there in the letter of credit related to the price, product price to be 500 per unit approximately, in that particular price, this price range would be acceptable. This is also applicable in the case of the amount of the credit. So if the amount of the credit was mentioned to be rupees 50 lakh approximately, or let us make it easier. So if it was mentioned to be 1 crore approximately, what does it mean? It means there is a tolerance level of 10 plus minus 10%, that the letter of credit may range with the credit of 90 lakhs, that is minus 10% from 1 crore, and further 10 plus 10% to 1 crore, that is 1.10 crore. So it is ranging from 0.90 crore to 1.10 crore. Is it clear? So that is related to the tolerance, that is related to the about or approximately when it is mentioned along with the amount of credit, or it is related with the unit price related to the product. And further, a tolerance not to exceed 5% more or 5% less than the quantity of the goods allowed. So if the words have been used, if the same words have been used for the number of unit products, or let us say for the quantity, in that particular case the tolerance is plus minus 5%. In that particular case the tolerance is plus minus 5%. The only condition is that the quantity must not be mentioned in the letter of credit. The quantity must be mentioned in terms of the packing units or individual items, specifically in the letter of credit. In that particular case you can take a tolerance related to the quantity to be plus minus 5%. Is it clear? So that these are very important stipulation under the article 30. After that, it is related to article 31, that is relates with the partial drawings or shipment. Again, very important. When I was covering article 19, I just give you gist related to it, that what it is related to the partial drawings or partial shipments. So let us consider it. So presentation consisting of more than one set of transport documents. Let us suppose person A over here, a letter of credit was received by person A over here so as to deliver 1000 units, and let us say he shipped 500 units on 12th of August, and further the other set of 500 units on 14th of August. So for this delivery, for transporting these 500 units, he get bill of lading 1, let us name it BL1, and for this particular transport on 14th of August, he got another bill of lading, let us name it bill lading 2. So he received 2 bills of lading, that is a different set of transport documents were received, different set of or more than one set of transport documents were received. Those are evidencing the shipment commencing. And let us say both these bill of ladings, both the transport documents will be transported on the same vessel. Let us take the case that the shipment of both of these orders will be on the same vessel. Like if we say the 500 units were shipped on 12th of August, and 500 other units were shipped on 14th of August, but they were transported on the same vessel. And further the transport began on 20th of August. In that particular case, even though the different transport documents are there, different set of transport documents are there, but the mode of transport was same. In that particular case, it will not be considered to be as the partial shipment. Even if they indicate different dates of a shipment, even if they indicate the different date of shipment or different reports of a loading, because they are traveling through the same transport, they will be shipped through the same transport vessel. In that particular case, they are not to be considered to be as the partial shipment. It will be considered to be as the same shipment. Okay. If the presentation consists of more than one set of transport documents, the latest date of shipment, as evidenced on any of the transport documents would be considered as the date of shipment. So as I told you that this bill of lading is having the date of shipment to be 12th of August, and further the second bill of lading is having the date of shipment to be as 14th of August. Now the date of shipment would be considered as 14th of August and not the 12th of August. So different transport documents were presented, and the transport document with the latest date of shipment will be considered to be as the date of shipment. It will be evidencing the date of shipment only. The prior dates will not be considered, only and only the latest date will be considered. And further, it is related to a presentation consisting of one or more set of transport documents evidencing the shipment on one or more of the means conveyance within the same mode of transport will be regarded as the covering a partial shipment. What does it mean? It means if the different shipments were there, let us suppose the same case. So shipment was made on 12th of August, related to and bill of lading one was received, and one shipment was made on 14th of August, and relatedly bill of lading second was received, and both those documents of transports were presented. Both of these documents of transport were presented. Now the mode of transportation, now the mode of transportation was same, but the means were not same. So the mode of transportation was seaway. It was a seaway, but the vessels that transported these documents, those transported these documents were not same. Those were different. So it was BL1 was delivered by shipped via V1, and BL2 was shipped via V2. In that particular case, this will be regarded as the partial shipment. It will be regarded as the partial shipment. Is it clear? Okay. So either of these are going to reach the same destination. They are going to reach the same destination. It may be the case they will be reaching the same port or maybe on the same dates, but it will be regarded as the partial shipment because the vessel was not same. Because even though the mode of transportation was same, but the shipment means were not same. Okay, and after that it is related to the installment drawings or shipments. So if a drawing or shipment by installments within given period is stipulated in the credit, and any installment is not drawn or shipped within the period allowed for that installment, the credit cease to be available for that and any subsequent installment. What does it mean? Let us suppose the case of the deferred letter of credit, deferred payment letter of credit. In that particular case, different installments were to be made by the applicant to the beneficiary. Let us suppose one is in the month of the January, and the other one it is in the month of the February, and the third installment is in the month of the March. And in particular case, let us suppose the other installments were there also. So there were in total 9 installments and 3 installments were there, and when the third installment was due, there was a time period stipulated that the installment was to be paid within 5 working days. After 21st of March. The amount was to be paid within 5 days. Okay, but the amount by the applicant was not paid. In that particular case, the credit will cease to be available. For any of the subsequent installment. The credit will not be available for any of the subsequent installments. Is it clear? So that is related to installments, drawings or shipment. So also this is true in the case if the shipments were made in installments. Let us say the beneficiary was to export the goods, not in a single time but in different shipments. Let us say 3 shipments were to be made: SH1, SH2, SH3. SH1, SH2 and SH3. 3 shipments were to be made by the beneficiary, and further there was the shipment second was not made in time. As per the time stipulated in the letter of credit. In that particular case, the credit will not be available for that particular installment and any of the subsequent installments, or shipments. Is it clear? So that is the case related to it. And after that, it is a case of the hours of presentation. A bank has no obligation to accept a presentation outside of its banking hours. So a bank has no obligation to accept a presentation outside of its banking hours. This clause is also very much important. Let us take the same case in which the beneficiary was to present the documents. To the negotiating bank over here, and 21st of August was the last date. And that is a banking day. And further, the documents were presented by the beneficiary to the negotiating bank, but after the presentation hours, after the banking hours. In that particular case, the negotiating bank can refuse to accept those documents. negotiating bank can refuse to accept those documents, can refuse to negotiate those particular documents, because the negotiating bank is having no obligation, having no liability so as to accept the presentation outside of the banking hours. Okay. Then it is related to the Article 34. Article 34 that relates with the disclaimer on effectiveness of documents. Disclaimer on effectiveness of documents, that relates with the bank assumes no liability, no responsibility for sufficiency, accuracy, genuineness or falsification or legal effect of any document. Bank is not basically related to it. Bank assumes no liability related to it. Okay. And further, or for the general or particular conditions stipulated in a document or superimpose their own, bank is not related to it. Bank is having no liability related to it. Bank is having no responsibility related to it. So whatever legal matters are there, whatever legal effects are there, whatever international laws are there, bank is only and only to be bank is considering its liability only and only for the international laws related to the letter of credit, and not any other responsibility related to the underlying contract between the buyer and the seller. Is it clear? After that, it is the Article 35. After that, it is the Article 35 that relates with the disclaimer on transmission and translation. So that is also the same, that bank basically disregards any type of the liabilities which may be there. So if there is any delay, due to the communication errors, there is any delay on the translation of the documents, the bank is not having any kind of responsibility for that. Bank is having no responsibility for that. Section Article 36 is again very, very important. It is related with the force majeure. It is related with the force majeure. A bank assumes no liability or responsibility for the consequences arising out of the interruptions of its business by act of God, rights, civil commotions, insurrections, wars, act of terrorism, or by any strikes or lockouts or any other causes beyond its control. So if there are any causes that are beyond the bank control, the bank assumes no liability or responsibility for such consequences. Is it clear? Okay. So if the documents were presented by the beneficiary to the negotiating bank and the presentation was to be made by 21st of August, it was to be made by 21st of August, and further from 19th of August, there were riots in the area where the negotiating bank was situated. There were riots in the area where the negotiating bank was situated, due to which the beneficiary was unable to present the documents. To the negotiating bank by 21st of August. Now the beneficiary went to the bank on 22nd of August and presented the documents, but the negotiating bank refused to accept the documents. But beneficiary over here said that it is not of his honor, that is because not of his error, or because not of the beneficiary's cause that he was unable to present the documents. That was basically due to the civil rights over there. So the negotiating bank will be having no liability or responsibility related to that. That is covered under Article 36 force majeure. Okay. Then it is related to the Article 37 that relates with the disclaimer for acts of an instructed party. So whatsoever different banks are there in the letter of credit, whether it is the advising bank, whether it is the confirming bank, whether it is the negotiating bank. So if there is any instructed party and further there is any error at the part of the instructed party, the issuing bank will not be responsible. So a bank is utilizing the other bank's services for the purpose of giving effect to the instructions. So as for the purpose of giving effect to the instructions of the applicant. But if there is any discrepancy, the bank is not responsible at all. The issuing bank will not be responsible at all. Okay. And after that, it is related to the Article 38, that is a transferable credit. A transferable credit may be made available in whole or in part to another beneficiary. Okay, like I already told you, let us suppose a letter of credit is opened by the applicant and it is in the name of the beneficiary B1 over here, and it is a transferable letter of credit. Now B1 will went to the bank XYZ, that is the B1's bank, and further on the security of this letter of credit, on the behalf of this letter of credit, further credit was issued. A credit was issued, not the letter of credit. A credit was issued in the whole amount of the letter of credit or in partial amounts in the name of the different beneficiaries or in the name of the single beneficiary. That is why we say it is a transferable credit. In that particular case, we say it is a transferable credit. Other one, it is related to the Article 39 that says assignments of proceeds. That relates with the assignments of proceeds. The fact that the credit is not stated to be transferable, even if it is not mentioned that the letter of credit is transferable, shall not affect the right of the beneficiary to assign the proceeds, because basically the letter of credit which is issued in the name of the beneficiary is an evidence related that beneficiary will be entitled to receive the proceeds, will be entitled to receive the proceeds of the, will be having the right to proceed, the right to get the proceeds. Okay, so it is basically an evidence. The letter of credit which is opened in the name of the beneficiary, it is an evidence relatedly that the beneficiary will be getting the proceeds. Okay, so if the beneficiary fulfills a shipment, it will be getting the proceeds. It is a evidence for that particular purpose, and that right cannot be taken away. That right cannot be taken away even if it is not mentioned that the letter of credit is not transferable. It means the beneficiary's right to get the proceeds of the letter of credit is always there, and in accordance to that particular purpose, he can assign the proceeds. Too. So beneficiary will be going to the bank XYZ over here and asking that he wants to avail a credit facility. Even if it is not mentioned on the letter of credit that if it is transferable or not, he can assign the proceeds. Which he will be entitled once he ships the goods. Okay. Then it is related to the eRules or the e-UCP. eRules or e-UCP, that is related to the Electronic Rules or Electronic Uniform Customs and Practices 600 version 2. So there is digitization. Each and every concept is not digitized, whether that was banking, whether that was trade, each and everything is digitized. Even our payment systems are digitized. Okay, so e-rules will be continually monitored and updated to reflect the future technological development. So there are huge technological developments and there are emerging trends in this field also, in the international trade also. So the e-rules will be continually monitored and being updated so as to reflect these digitizations. Okay, so as to reflect these technological updations. Okay, so ICC will ensure that the e-rules will remain applicable to banks and other trade finance institutions. Okay, so that is basically related to e-rules. So you must be having an idea that what are e-rules, what is e-UCP 600 version 2. Then it is URR 725, the uniform rules for bank-to-bank reimbursements. The uniform rules for bank-to-bank reimbursement. As I already told you that if the reimbursement to the nominated bank, so as to the non-negotiating bank, is to be made by some third party bank, in that particular case, if it is expressively mentioned in the letter of credit that the reimbursement would be as per the URR 725 rules, in that case only these rules would be applicable. In that case only these uniform rules will be applicable for the reimbursement purposes. Is it clear? So URR 725 rules are the uniform rules for bank-to-bank reimbursements under documentary credits, and further URR 725 was approved by the ICC national committees at the ICC, and further these are effective since 1st of October 2008, and URR 725 is updated version of URR 525. And related to what is the scope of 725, so URR 725 rules will apply to any bank-to-bank reimbursement under the documentary credits when it is expressively indicating that these rules are applicable, only and only in that particular case these rules would be applicable. Okay, and further Definitions from the UR 725. First of all, it is related to the reimbursing bank. First of all, it is related to the reimbursing bank. So what does a reimbursing bank means? It means the bank which is instructed or authorized by the opening bank, which is instructed by the opening bank or by the issuing bank so as to reimburse the nominated bank or the confirming bank. That is basically the reimbursing bank. And what is reimbursement authorization? It means an instruction or authorization. It means an instruction or authorization independent of the credit. So basically letter of credit is different, and further if there is contract between the issuing bank and the reimbursing bank, that is separate from that of the letter of credit. That is not related to the letter of credit, but it must be specifically mentioned in the letter of credit if there is some third party arrangement. Okay, only and only that case UR 725 rules will be applicable if it is expressly mentioned in the letter of credit. And further, reimbursement authorization would be an authorization by the issuing bank to the reimbursement bank, and that is separate, that is independent from the credit, so as to issue by the issuing bank to a reimbursement bank. So it is an authorization by an issuing bank to the reimbursement bank to reimburse the claiming bank, so as to reimburse the claiming bank. So if requested by the issuing bank and accepted by the reimbursement bank so as to reimburse the nominated bank, that would be a reimbursement authorization. Further related to reimbursement undertaking. So reimbursement undertaking means that is a separate irrevocable undertaking of the reimbursing bank. So an undertaking will be given by the reimbursing bank. So an undertaking will be given by the reimbursing bank which is issued upon the authorization. So post the authorization by the issuing bank and acceptance by the reimbursing bank, that the reimbursing bank will be basically complying, will be undertaking will be honoring the negotiating bank or the nominated bank. That is basically related to what? That is related to the undertaking which is taken by the reimbursing bank over here. So it is a separate irrevocable undertaking of the reimbursing bank issued upon the authorization or request of the issuing bank to the claiming bank. So this undertaking will be given to what? It will be to the nominated bank or to the claiming bank, we can say, confirming bank, we can say, to which the claim is to be honored, to which the claim is to be honored. Okay, then it is a claiming bank. Claiming bank means a bank that honors or that negotiates a credit, to whom the presentation was made, to whom a complying presentation was made. And if it is complying presentation, in that particular case the claiming bank will be paying the amount to the beneficiary either on site or on usance period, okay, that is basically the claiming bank. After that, a reimbursement bank will be having maximum 3 banking days following the day of reimbursement claim to process the claim. So once the letter of credit is honored by the nominated bank or by the confirming bank, in that particular case the reimbursement bank will be having maximum 3 days following the date of reimbursement claim. So when the claim was subjected to the reimbursement bank, and on the date which the reimbursement claim was received, following that particular date. So if on 21st of August the claim was received by the reimbursement bank, so now reimbursement bank will be having 3 days ranging from 22 to 24 so as to settle this claim. And further, reimbursement claim received outside the banking hours will deemed to be received the next working day. So if this particular claim is received after working hours, it will be deemed to be received after on the next working day. So if it was received on non-working hours, if the claim was received after banking hours, in that particular case it will be considered that it is received on 22nd, and as per that particular only the next 3 days the claim would be settled or processed. A person resident outside India who is a citizen of India can acquire the following type of property in India. So which one of the following it is? So which one would be the right answer? So person who is resident outside India and wants to acquire some property in India. So what type of property that person can acquire? It would be related to the agricultural land, plantation farm, farmhouse, or any other land. So what type of land can be acquired? So we have already learned that no person who is resident outside India, he cannot invest money into any of the immovable property that is related to the agriculture purposes or for the plantation purposes or as basically on the form of the farmhouse. So he can go for any other land. He can he can acquire any other land for his personal use or for the business activities. So option D over here in the question number 6, option D over here is the right answer. Let me mark the right answer over here. So option D over here is the right answer. Next question, it says, which of the following services can be offered in the correspondent banking by banks to each other? Which of the following services can be offered in the correspondent banking by banks to each other? LC advising, that is letter of credit advising. And what is letter of credit advising? That will be covering in the next unit. Further, LC confirmation, so as to give an additional guarantee in the letter of credit, that is LC confirmation. Giving bankers acceptance. And fourth, it is related to issue of bank guarantees. And fifth, it is related to custodial services. So which one of the following is the right answer in this particular case? So which one of the following is the right answer? So we are talking about the relationship banking in the correspondent banking and what type of services can be offered in this particular case. So banks can offer all these services, whether it is related to letter of credit advising or related to collection of the checks of the instruments, or it may be related to the issuance of the instruments, or it may be related to the acceptances or issue of bank guarantees or custodial services. All these services can be offered in the correspondent banking arrangement. So option D over here is the right answer. So option D over here is the right answer in this particular case. Okay, now let's move to the next question, which is the question number 8 over here, which says, if a loan is allowed to a NRI against his term deposit of FCNR B or NRI RA account. So a loan was sanctioned to a NRI person against the deposits of the foreign currency non-resident banking account or non-resident external rupee account. The amount can be credited to which of the following accounts? So in that case, the amount will be credited. The loan amount will be credited to which of the following accounts? To FCNR B accounts, NRO account, NRI R account, or any of the above. Which one of the following would be the right answer? So the question is that if a loan has been sanctioned to a person against the NRE balances or against the FCNR balances, the loan amount will be credited to which of the following accounts? The loan amount will be credited only and only to the NRO accounts. It will be credited only and only to the NRO accounts. Is it clear? So the loan amount will be credited to NRO account. So option B over here is the right answer. So option B is the right answer. Now let's move to the next question, which says, when the correspondent bank offers services related to handling of outward payments, receipt of inward payments and collection, and these functions are covered under which of the following? तो ये functions कौन से यहाँ पर हेड में कवर होते हैं? अंडर द क्लियरिंग हाउस फंक्शंस, कलेक्शन फंक्शंस, पेमेंट फंक्शंस और इन्वेस्टमेंट सर्विसेज. So when the correspondent bank offers the services related to handling of the outward payments or receipt of inward payments and collections, these functions are covered under which of the following? These are covered under the clearing house functions. So option A over here is the right answer. So option A over here is the right answer. The next question, it says, in which of the following the NRIs can make the investment? Units of mutual fund on a repatriable basis, units of mutual fund on non-repatriable basis, company deposit on a repatriable basis, company deposits on a non-repatriable basis. In which of the following the investment can be made by the NRI person? We need to identify and answer accordingly. So units of mutual funds on a repatriable basis or on non-repatriable basis, company deposits on a repatriable basis and non-repatriable basis, which of the following are correct and which of the following is not? So which one of the following would be the right answer? So we need to identify the different statements, that which of the following statement is correct and answer accordingly. So option B over here is the right answer. That is, all of the four are correct. That is, all of the four are correct in this particular case. So option B is the right answer. And further, when the person is investing in deposits in the company, when the person is investing deposits in the company on a repatriable basis, in that particular case there was a condition. Condition was related to that the funds will be invested at least for a period of 3 years. That is, a lock-in period would be at least for 3 years if the person wants to invest for the repatriable basis. Is it clear? Okay, now let's move to the next question, which says foreign currency non-resident account can be opened as saving bank or current account, a recurring deposit account with a fixed period of 1 to 5 years, term deposit account with a fixed period of 1 to 5 years, term deposit receipt for a fixed period of 1 year to 3 years. So which one of the following would be the correct answer in this particular case? So FCNR account can be opened only and only in the form of the fixed deposit receipt account. So it can be opened in the form of the FDR account only. It cannot be even maintained in the form of the recurring deposit account, and further it cannot be maintained as a saving fund account or a current account. Okay, so it will be maintained in the form of the fixed deposit account only. So option C over here is a right answer, because the minimum tenure of the maturity is 1 year and the maximum tenure of the maturity is 5 years and not 3 years. So answer will be option C in this particular case. So answer over here will be option C. Now let's move to the next question. That is a question number 12, which says FCNR deposit account can be opened in which of the following group of currencies? FCNR account can be opened in which of the following group of currencies? So we need to identify the right group of the currencies in which the FCNR bank account can be maintained. So it is USD, Canadian dollar, Singapore dollar, pound sterling, yen only. So which of the following would be the right answer? So it can be maintained. So answer over here is option C. So it can be maintained in any of the convertible currencies, including USDs, Canadian dollar, Australian dollar, euro, pound sterling, yen. Okay, so it can be maintained in any of the convertible currencies. It can be maintained in any of the convertible currencies. So option C over here is the right answer. Question number 12, option C is the right answer. Next question, it says, as per general permission to a person resident outside India, subject to certain conditions, can make investment in. So as per general permission, a person resident outside India, subject to certain conditions, can make investment in equity shares, preference shares, convertible debentures, or all of the above. Which one of the following is the right answer? Which one of the following is the right answer? So these questions have been selected in such a manner so that you could retain the concepts. Do not say like that the questions are very much simpler. These kind of questions are not asked in the exams. Just keep one thing in mind. If 2 or 3 these type of questions are mixed, it will sound somewhat difficult. But you need to retain the things first of all. So our effort must be there related that we want to retain particular topics. We want to retain the particular concepts. Okay. So option D over here is the right answer, that the person who is a resident outside India, as for the general permission, he can invest in the equity shares or the preference shares or the convertible debentures of Indian companies. So option D is the right answer. Question number 13. Next question, it says, a foreign bank in UK has opened a current account with SBI in Mumbai. So foreign bank in UK has opened a current account with SBI in Mumbai. Which of the following is correct in this particular case? So foreign bank is maintaining a current account with SBI in Mumbai, and further which of the following account it would be? For foreign bank it is a Vostro account, for SBI it is a Nostro account, for foreign bank it is Nostro account, for SBI it is a Loro account. Which one of the following would be the correct answer? Which one of the following would be the correct answer? So you must be clear about the concept of the Nostro and Vostro account. So when we are maintaining an account in the foreign country in foreign currency, that is Nostro in our books. But for that particular bank, it is Vostro account. Let us suppose person bank A over here is maintaining a foreign currency account in bank B in foreign currency. Okay, foreign currency. So that would be basically Nostro account in the books of bank A, but Vostro account in banks of book B, in the books of bank B. Okay, so in this particular case also, bank is maintaining, a foreign bank is maintaining an account, a current account with the SBI in Mumbai. So for that particular bank, that is for the bank A over here, that is a foreign bank over here, the account which is maintaining with bank B, that is the SBI, is what account? That is a Nostro account in the books of bank A and Vostro account in the books of bank B. Is it clear? So for SBI it is Vostro account, which is stated incorrectly in option B, whereas in option C it is stated correctly, that is for foreign bank it is Nostro account. So option C over here is the right answer. Option C over here it is the right answer. For foreign bank it is Nostro account, not the Vostro account. So option A is incorrect over here. Okay, so you must be clear related to the basics. So these are the basics, you need to memorize them. Further, it is related to the next question, which says loan can be allowed to NRIs against their term deposits. So whatever deposit they are maintaining in the FCNR bank account or NRI rupee account, they are allowed that the loan can be sanctioned to them for the personal use, for carrying on business activities, making direct investment in India on a non-repatriation basis, acquisition of house or flat for residential use or purposes, making investment in agriculture land or farmhouse or plantation activities. So for which of the following activities a loan can be sanctioned to an NRI person against the balances? So for which one of the following purposes a loan can be sanctioned to an NRI person? So loan can be sanctioned for personal use, loan can be sanctioned for investments in India on non-repatriation basis, a loan can be sanctioned for purchase of flat or house for personal use, and further a loan can be sanctioned invest in any immovable land for agriculture purposes, for plantation activities, or in the real estate for earning income or earning profit from it. Okay, so option 5 over here is not correct, rest all are correct. So answer will be accordingly option A. So answer A over here is the right answer. Answer A is the right answer in this particular case. Okay, now let's move to the next question, which says which of the following is not correct with regard to NRE accounts? Which of the following is not correct in regard to NRE accounts? So funds are repatriable from the account. Funds from FCNR bank account can be transferred to this account. Interest rate is fixed at the discretion of the bank without any ceiling. Funds can be transferred to FCNR account from this account. So which of the following would be the right answer in this particular case? Question number 16. So you must be clear with the basics. First of all, you must have the knowledge related to the topic, only then you can answer correctly. Okay, first of all, it says funds are repatriable from this account. Yes, the funds are repatriable freely. There is no restriction. There is no complexity. And further, funds from FCNR accounts can be transferred to this account. Yes, definitely. On the prematurity withdrawal or on the maturity, the proceeds can be transferred to NRE account, and further interest rate is fixed at the bank's discretion. This part is correct, but definitely there is a ceiling. The maximum interest which can be given by the banks in the NRE accounts, it cannot go beyond the interest that they are offering to the domestic account holders. Okay, so option C over here is not correct, and we were to find out the incorrect statement. So option C is the right answer, and option D over here is also stated correctly, that is funds can be transferred to FCNR account. That is also true. That is also true. Okay, after that it is related to question number 17, which says when correspondent bank handles and executes all payment instructions of the client bank by debit to their account, it comes under what type of part or what type of the functions of the correspondent banking? Clearing house functions, collection function, payments function, or investment functions. So it comes under which type of the banking? It comes under which type of the functions of the correspondent banking. So it is related to when the correspondent bank handles and executes payment instructions. So it is related to what? As the name suggests, it is related to the payments function. Okay, so option C over here is related to what? Payment. C is related to the payments function. So option C over here is the right answer. Question number 17, option C is the right answer. Next question, it says a customer has requested for sanction of a rupee loan against the security of an FCNR term deposit. So a customer has requested for sanction a rupee loan against the balances of FCNR account. So loan can be sanctioned to any extent. Loan can be granted maximum up to the value of FDR with appropriate margin. Loan can be allowed maximum up to 100 lakh rupees, that is 1 crore. No loan can be granted as a rupee loan. So which one of the following is correct one? Which one of the following is correct one? Definitely a rupee loan can be sanctioned against the balances held in the FCNR account. That is true. And further, the loan will be sanctioned for what? For basically what? The loan can be sanctioned with maximum up to the value of FDR along with appropriate margin is to be maintained. So option B over here is the right answer. Option B is the right answer in case of question number 16. Okay, now let's move to the next question, which is an NRI has requested for a house loan in India. Which of the following statement is correct in case of this loan? So which of the following statement is correct? Quantum, margin and period of loan as for the resident Indians. Amount can be credited to the NRI, FCNR or NRO account. Repayment can be from fresh inward remittances. Repayment can be from balance in FCNR, NRE or NRO account. So which one of the following would be the correct? Which one of the following would be the correct in this particular case? So kindly do answer at the earliest which one of the following will be the right answer. So it says quantum and margin and repayment period would be as for the resident Indians. That is correct one. Amount can be credited to NRE, NRO or FCNR account. Is it true? No, it is not true. So whenever a loan is sanctioned, whenever a rupee loan is sanctioned, it is to be credited to what account? It will be credited to NRO account only. Just do remember this. Okay, so it cannot be credited to NRE or FCNR account. So option B over here, statement B over here is wrong. And option 3, statement 3 over here, it says repayment can be made from fresh inward remittances. Is it true? Yes, it can be done. Repayment can be made from the inward remittances, from fresh inward remittances, and also the balances of NRE, NRO or FCNR account balances can be used for the repayment of the loan. Okay, so statement 4 over here is also correct. So 1, 3, 4 are correct, and accordingly the answer will be option C. So option C will be the right answer in this case. Next and the last question, it says a depositor of FCNR account has decided to return to India for permanently staying in India. So a depositor of FCNR account, so person was maintaining FCNR account and further now he decided that he'll be staying over here in India permanently. Okay, in that particular case, FCNR account will continue till maturity. It will be treated a resident account from date of return. Premature withdrawal of such deposit will be with penalty. All of the above. So which one of the following is the right answer? Which one of the following is the right answer? So if person A is here and he was maintaining FCNR account first of all the account will be treated as the resident account from the date of return. The account will be treated as the resident account from the date of return. So option B over here is the correct. And also if there is premature withdrawal by the customer itself, then there will be a penalty. There will be the swap charges or any penalty rate that is applicable as per the bank discretion that will be charged. And further, FCNR account will continue till maturity. That is also true. Option A is also true over here. So option D is the right answer. Option D is the right answer, that all of the above are correct. And further, it will be treated as a resident account from the date of return, because if the any interest is earned on it from the date the person became resident, the interest earned on it would be subjected to TDS, okay. So option D over here is the right answer. Option D is the right answer in this particular case.